Bring me sunshine all the while.
Here he comes. Happiness.
Shut up.
What are you so happy about?
I'm not happy. I had to make my own coffee. Because you were on strike. Cow. I love you though. Hello boys and girls. We're having a sing-song today. I'm going to have a little bit of a chat about compounding. And a very warm welcome to one and all. And for those of you who have not seen me before, I am the vocal talent that is the Scruffy Trader. And my beautiful assistant here is the screaming cat who can't sing to save her life, Winky.
I don't try though.
I know, I wish you would. I try to get her into karaoke all the time. Me, I'll wail away like there's no tomorrow. She does none of it. But that's why we get on, because they often say opposites attract, and we're about as far apart as you get. She's very ladylike and quaint, and let's just say I'm not. Anyway, you're not here about our marital bliss. You're here to see about trading. And that's what this channel's all about. It's really just kind of a working vlog of what I do on a day-to-day basis down in this office, which happens to be in my wife's business. That's the beauty of trading. I can do it where I choose. Or you see me at home in my office. But wherever you see me, I'm going to be having a coffee, and I'll definitely be an overgrown child. So if you like trading and you want to see it in real time and in the real world, please click that subscribe button. It genuinely helps, as does smashing the like. But more importantly, it motivates me to do more of this. So what am I banging on about today? Compounding. What's that got to do with trading? Believe it or not, it has a lot to do with trading, because compounding is what can kind of generate your income to becoming a wage. And it's because it was requested by Yoxie last night. A little salute to you, my little redneck trucking friend. I hope the truck's doing well. He asked if I explain it a little bit. So, how do I explain compounding? Well, Einstein described it as the 8th wonder of the world. Personally, for me, that was King Kong, because it was in the film. But Einstein decided to change it and decided compounding was. So how is it? Because it's a way to grow your income substantially with not too much thought. And I know that sounds a little bit hard to understand, but it really is, because you don't have to be a genius to work it out. You just have to follow a little bit of a plan. So what I'm going to do today, I'm going to do my trade as normal. Today I called out, if you saw the strength video earlier on, it was just nothing. It was really hard work. But cable is looking okay, as is pound JPY. So what I'll do is I'll fire my screens up, I'll do my trade, and then at the end of it I'm going to pull up the sheet and I'll show you how compounding can genuinely increase your wages.
We're waiting.
Okay, boys and girls, come back. There's basically 3 markets I'm looking at today. As I was saying earlier on, I make a strength video. If you want to see it, it was released early this morning. But basically, it's this. And what it's pulled out, as you can see, the euro and the pound are pretty strong. And the US, well, it's starting to lose ground again. And because the euro and the pound are on the strong side, it's opened up an opportunity. These pairs here, they're all right, but there's nothing singing home about. I've already done pound JPY this morning, because for those of you who follow me, know that I've been trading the 5%ers. So let's have a look. There's the little history there. I know it's not big amounts, but it's only a small micro account and I'm building it up slowly. And that's something that I kind of want to get across, and it's what I'm going to get across later with the compounding. It's about slow growth, but using the money to build up. Okay, and I'll go through it more. Now, so it did me proud by pulling out that pair, which you've just seen that I traded. But now I'm looking at the pound and the euro. And why is that? Because they move every day. Now, of the 3 markets that are available to me, this is okay. It's going to be a little while. It's 12 o'clock now, so I'm not rightly sure whether I'll get anything out of it today. This one's showing a little bit of sign as well. But we've also got the DAX. Now, the DAX is showing good movement. In fact, it's coming in right now. And let me just clean my screens down a little bit so I can see what it is that I'm looking at. Yeah, what I've done, it looks like this is the play. So I'm going to leave these 2 for the next hour or so. I'll just expand this out. As you can see, it's all marked out. It's tagged the level and it's coming in off a colossal drop on the hourly. And these are my daddy levels. Okay, so this is where I think we might get back to. Let's go down to a 15-minute. Yes, you can definitely see it slowing down. Big candle, slam, slam, slam. The buyers are there. It's gone up, it's pushed down, but the buyers are still back. And that tail told me this. Couple that with the zones that I mark in. And these zones are very important to me. Then they're placed in a particular place to help me gauge how to get into the market. So drop it into 5 minutes so we can see exactly what's going on. And there we go. You can see the pulses. So even if I just work on the pulses, there could be a half decent opportunity here. So what I'm going to do is I'm going to put an order here at the top side of this in a moment. I just want to kind of watch what's going on for a minute or two, because I want to really see a close in here. Now that might push down. So what I'm going to do is I'll do my trade. I'll tell you what it is I'm going to do so you can see the speedy thing. And then at the end of it, later on this afternoon when it's finished, or maybe when I get home, I'll then go through how to compound your winnings to help you make a wage. Hope that kind of makes sense. So what I'm essentially going to do with this, and it'll be the same with the other 2 markets you've just seen. If I can't get a trade out of this, I'll then drop it back over onto cable or onto the euro, because that's starting to vaguely show signs as well. But the one at the moment, certainly for the next hour, is going to be this. So my aim is I want to see a tag of this green. If it pushes through to here, that's fine. I'm not really worried. I'll be looking to go long. We have a main target up here. So that daddy level coincides with this zone. And if I move up, there's another daddy level just before there. So it's got some work to do to get up there. And it's got 1, 2 roadblocks before it can get up into the top level. But I definitely think I can certainly make money from this green into that red. If I can break the red, I'll make a reasonable amount up to this green. My goal today is £200, as it is always. I look for a couple £100 a day, and if I can get it, result. And if I don't, well, then I don't. But at the moment, it's not quite there. So what I'm going to do is I'm just going to watch it, as you can see. So if I put the order in there, it still has to come. It's closed inside, so it's ready to pop. And in fact, it is kind of ready to pop. So I'm going to start putting some orders in, but I'm going to 1, 2, 3, 4, 5. It's kind of the top of this where I need to be. So I'm going to be a bit careful with it because the DAX can be a little bit of a monster at times. So we'll put a 5 in, just like so, and we're going to put another order in the same place for 10, just to get it started. And the idea is to move down. In fact, 1, 2, we put the third order in, it'll get us into this red zone. I just want to leave a little bit for some scruffy madness. And if you don't know what scruffy madness is, it's a way of negative averaging into the position, basically getting a better price. I don't like to put all my eggs in one basket. And I'll be doing that. If you bear with me, I'll just pull this down to this level here. So I'm happy to average in to this line. If it goes past this line here, I'll just duplicate that just so I can highlight it. There. If we go past this red line, I start to get into a world of pain that I don't want to be in. So that's my game plan. I'm looking to get into the trade here, get some money out before it gets into this red zone. When it gets into the red zone, I'll be looking to enter again, possibly to move up into this green zone. However, if I've got enough money through bouncing backwards and forwards before it breaks this, that'll be it. Because one thing that I do think about trading is less is more. As soon as you're paid and you're done for the day, quit. Because when you go back to market, you'll find you're on the wrong side of the trade, and that'll hurt. Okay, so let me do my thing, and then I'll come back to you at the end. I'll explain the trades that I've made, and I'll explain compounding. Okay guys, it's coming up to 5 to 4, and this is just tippling around. It looks like it's not really going to burst out. So what I'm going to do is I'm just going to close them down because I've had a pretty good day. It's been all right. There we go. In fact, it's been a much better day than I thought. 720 quid for an afternoon. Looks impressive. It is. Could have had a lot more out of it if I wasn't sort of preoccupied on this screen, and also had a visitor. Juan's dad turned up, couldn't work his mobile phone, and I had to fix that, and it was very difficult to try and concentrate on two things at once when he's yapping in my lug. But that's what happened. But anyway, superb wage done, dusted, all off the single idea. And that's one of the other things that I try to stress. It looks like I trade a lot. I don't. It's one single idea and then it's just broken up and managed. And that's what compounding is. So what I'm going to do is I'm going to wrap up here and I'll pick it up when I get home. And I'll show you what a compounding sheet is and explain how it's used to basically increase your trading fund, which you can then use to increase your salary. It's how I built my accounts up. So I'll see you when I get home. She's a devil woman. The devil woman. Right, boys and girls. So I've come home, got my coffee, and as I said, I'm going to have a little look at compounding. So I'll give another little salute to Billy Bob, our resident redneck in the Scruffy Squad. He winds me up on a daily basis, so it's nice to get a little bit of payback from the over-trading Satan himself. So this one's for you. Catch you soon, my friend. I'll rip you a new one later on tonight. Compounding. What is it? Why is it? And how is it important? Well, when you first go into the markets, you're dazzled by the bright lights and you think you're going to turn your 200 quid into millions and all of this sort of thing. And I get it, you know, and funny enough, as much as I think I'm level-headed and been in business a long time, many moons ago, I kind of looked at it in a similar way. But one thing you do realize when you're in business is it takes money to make money. All right. So in order for you to get your wages, which is ultimately what we try to achieve here, you're looking for your time freedom and your financial freedom and everything. It ain't happening off 200 quid overnight. You have to grind away and make that £200 into a pot that's big enough to make you a livable wage. Because if you're thinking you're going to go 200 quid and then you're going to turn that into 2,000 a month or 1,000 a month, the gains on that are colossal. And to constantly do it, you would be Bill Gates in 2 years. It's just, the maths doesn't stack up. So you have to look at it like a business. And when you're in business, you build it. So you buy a little bit of inventory, you sell it. With a little bit of profit, you buy a little bit more inventory, you sell that. And with the extra profit you make, you buy more inventory, and it builds and builds and builds. And that's what compounding is in a similar way. And compound interest is interest on interest. So if you start with, say, £100 and you grow it by 1%, you would then have 101. And then the interest is done again at the same rate, but you now got interest on 101 and so forth and so forth. But let me pull up the sheets and I'll kind of explain it in the way I look at it, because I don't think trading up the balance is the way forward. I do it a different way, and I'm going to show you. So let me get my screens. So I run everything on spreadsheets, as you know, and I have a compounder on here, and I up the bid size. And the reason why I up the bid size is the balance will look after itself as long as I work out what I'm doing. Now, as you can see, that's today's date. I've had a good time on the US CAD this afternoon. I'll pull the 5% up. And compounding is exactly how I'm building this up. This is this account, that is today. Didn't lose a trade, $29. But look at the bid sizes. They're like 30 pence. Just 30p. and it's created me that. And the balance itself on that account is now just shy of 13,500. So it's grown up nicely over the last few days. So let me look at this. The first thing I do when I come on to working out what it is I want is I need a goal. And you can kind of see all of that here on this sort of thing here. That 1963 minus is actually how far above that target I've gone today, because I set a target each day, and that's all part of this. So I start here with what I call a wage maker. If you're looking to make 50,000 a year off the gate, it's going to be hard. So try and keep it realistic. The first goal I ever set myself many years ago was 10,000. All right, I want to trade up into 10,000, and that's a good goal. So I can put 10,000 in a year there, right? Well, I can put anything I want in. As you can see, all the figures miraculously change. Just move that back to 10,000 because it's realistic. We can understand it. What it's telling me is I need to make 833 a month, 208 a week, or 41 a day. Now this is based over 48 weeks because I'm assuming people want holidays, etc. It's a benchmark. It's giving me something to work to. Then I need to work out what trades I do per day. Now I like trade once or twice a day, so I work on one trade a day with an average win of 10 pips. Why 10 pips? It's just an arbitrary number that is relatively easy to achieve, and you should be able to find a market every single day that can give you 10 pips. I know I can because I do it every day and I constantly show you this. And with that 5% that I've just shown you, it's fully documented, so you can actually see that's exactly what I've done every day. So the next part is how much per pip do I need to achieve? So I'll move this down till I find 1 trades per day, and there it is there. So if I want 10,000 in a 12-month period, I need to be at £4.7 a pip, 10 pips a day for one trade. Right? That's my starting point. So the next thing is I have to work out how much I need in my account to cover that bill. Well, depending on the markets that you're in, you're going to need probably 2,000 to 3,000 in your account to cover that bid size. So the chances are no. So you have to build up to that bid, and that's what I'm driving at. So your first part of compounding is getting your account to a level that can trade that bid size. Right? So that's your first part of your puzzle, and it's your first goal. All right? Now, if you've only got a couple £100, you ain't opening a position for £4.07. You'll probably be opening it at about 25p to 50p. So that's where this part of compounding comes in. So if I start with £200, because it seems to be a reasonable figure, or even £500, just let's push the boat out a little bit and make it a little bit reasonable. So you've got £500. That'll open up pretty much most Forex pairs, indices, etc. at 50p a position. All right, or a nano lot size, and you'll have a little bit of buffer if you get it wrong. So how does it work? Well, there's your pips, which you put along the top here, and you're not splitting it. That's what this is here. So it's 50p a pip, and you're looking for 10 pips. So on your first day, you make a £5. All right. And just bear with me with this. And you think, great. But now this is where the compounding effect comes in. Because if you're trying to compound the balance, it's going to be very hard, you know, because as the account gets bigger, 1%, 10%, etc., gets pretty big. But if you set sort of a 5% growth on the position size, you're talking pennies. So the next day you come to market, because you're only looking for one trade, remember, you make the same trade for your 10 pips, but you put your bid size in at 53p. And what's happened is your fiver that you made yesterday is allowing you to move the bid size up slightly. So you're now making, for doing exactly the same thing, £5.25. Now the next day, you come back to market and you move it up by an additional 5%. And it's 55p a position, because you're now using the 1025 to increase your bid again. And you keep doing that day after day after day. And as you see, it starts growing constantly. And because, sort of, there you go, after say the first month, you're only on £1.54 per position, and you're making 15.36 per trade. Most people go, it's no, maybe 15 quid. What you're forgetting is, it's like everything else. It's like an apprenticeship. When you first start your first job, you get paid peanuts in the beginning. But then as you get better and stronger, your wages increase. This is the same. In the beginning, you have to build it. But it's also building you a foundation. And that foundation is your account is growing and growing and growing, giving you a better buffer zone each time. And because you're only looking for one trade, it'll stop you over trading. Because over trading will kill your account. So all you're doing all the time is looking for the best setup. And that's it. No substandard. Ticks all of the rules. That's the one. And if you miss a day, well, you miss a day. And you'll find your consistency is far better. And as you say, you go through and then you work your way up to there. Take you 9 weeks. In the grand scheme of things, that is nothing. 9 weeks. And then on your 9th week, you can cap that at £4.7. And within 12 months after that point, you'll have 10 grand in your bank account. Based on just basic maths. Now what you can also do, so we've said that's at 9 weeks. Okay. This is a perfect world, by the way, guys. That's assuming you never miss a trade, blah, blah, blah. If you do, just step back twice. That's how I do it. When I'm compounding, if I make a loss, I step back twice. So for argument's sake, if I was here, I lose, I go to 67. Just takes the stress off the account and relaxes your mind a little bit. But as your account grows and it gets a bit bigger, you're allowed to open up more positions. Now on the broker I use, the smallest position size you can use on, say, oil is 25p. Right? So my 50 pence bid initially could be split in two. And this is where you see me split up my trades. So it's the same setup, it's the same trade, but I'm going to put 2 orders in instead of 1. Now my other order will be at 15 pips. So if I change that to 2, what it does there at that point is it breaks the trade up. So my first one cashes out at £2.50, but the second trade cashes out at £3.75, and the profit of the same trade is now £6.25. So just by splitting it in 2 and letting one of it run ever so slightly, and we're not talking mega moves here, we're talking 15 pips or ticks, points, whatever you want to call it. easily doable. And an easy way, if you get frightened of doing this, as soon as the first one cashes out, immediately pull the order to break even and just let it play out. A lot of the time it will just smash into your first target and then pop up into the second one. But it's just if you're a little bit frightened of it, that's. And let's have a look. So you're now doing the same thing and you're rattling your way through, and when you get down to sort of here, instead of making your £40 a day as it was, you're making £50 a day. So not only are you shaving, adding extra money into your account, shall we say, because you're adding an extra £10 to the pot as well when you get it up to this level, you're shaving off how quickly your 10 grand comes. So instead of doing it in 12 months, you might do it in 11. And as your account grows, you just break the positions down more and more. Simple stuff. And that's how I compound. It's how I built my accounts in the first place. Not being a hero, not hanging on to trades, not sort of thinking, oh, I'm going to swing for the fences and get 100 pips. What's the point? How many times do you do it? Because I don't do it that often. And even my swing trades, and they can take 2 or 3 weeks to play out just to get maybe 100 pips. Whereas when I'm working during the day, I do 100 pips in a few days. Just grinding away at it like this. So that's my take on compounding. I hope it kind of makes sense the way I do things. It's just really trade management and looking at this as if it's a business. And if you can get your head around it, the process becomes relatively easy. And I've said it many times, the hardest part of trading is not the charts, it's not the bid sizes or anything like that, it's you.
Are you serious?
It's you over trading, it's you greed, hanging on to trades too long and watching you give back all of your profits, or doing it the other way, hanging on to a loser too long and destroying the account in the first place. Where sometimes just one trade a day, 10 pips done properly will give you 10 grand. And it's literally as simple as that, guys. And think of it that way. You know, do a trade, whether it's 7 o'clock in the morning, 7 o'clock at night, in the middle of the night, doesn't matter. Hit your 10 pips, stop. You're done. And just compound it up. So compound the bid, this bit here, just by 5% or even 10% if you want to be aggressive, but I would recommend 5 because then it moves up in very small increments, which doesn't damage the account, but all of these pennies add up. And then through time, you get to the level where you need to be. So in this case, we've just said 10,000 is £4.7. I work on a salary of 30 to 35,000, which is why you see my bid size between 15 and 20 pounds. You know, but my account size is big enough to take it. But it took 4 years to build it. All right, wasn't done overnight.
Isn't that logical?
So there we go, guys. Scruffy's take on Einstein's theory. Next week it'll be the theory of relativity. Like, I'm going to work that one out. The only relativity in this house is whether a relative of mine is going to turn up with its hand out or whether Winky's going to make me a cup of coffee. And the relative speed of the hand when I'm a bit, sort of being a bit cheeky to her. And she gives me the old spouse abuse.
Are you trying to get a rise out of me? Are you happy now? Is this what you want?
Oh, no, it's not what I want.
Never mind, never mind. It's been a long day today, guys. It really has. But it's been a great day. 5% has gone well. The trades I picked out went well, and the coffee's been flowing all day. And of course, as I've just said about relatives with the handout, the old fella turned up. Please fix this, I've broke it. Bloody hell. There we go. Nothing like a family reunion. Okay guys, I'm going to leave it there, otherwise I'll be rambling all night. So as always, my contact details are in the description. If you're stuck, by all means contact me. I'm very amenable, and I genuinely answer every comment that comes on the video, so please fire your comments in. And if you contact me via email, everybody gets a response. So as always guys, do what you love, the money will follow. See you all in the next one.